Hi, Clayton. This is Crystal from Maryland. And I was just wondering, with the issues that some investors are facing during this eviction moratorium, would you suggest that we offer shorter lease terms, for example, 1 year as opposed to longer going forward? And also, is there just anything else that you can add to your tenant lease to be more protective during these times? Thanks.
Thank you, Crystal. Great questions. Very thoughtful question. Thank you so much. I would say number one, you definitely want to work with your property management company on this question. So, like at Morris Invest, we only work with fantastic property management companies that have been in business longer than 5 years, that have great software, that communicate in an excellent manner with not only the clients but also the tenants. Are fantastic at doing background checks on tenants. So all of those things should be front loaded, right? So that you're protected later. During this pandemic, we've been in markets where the jobs have remained. That means the cash flow has sustained. That means tenants aren't going through eviction processes. Very, very important. So even during a pandemic, we've been investing in markets where Fortune 500 companies have moved, universities, hospital systems, et cetera. So when something like this does happen, you're protected ahead of time. Now, your question is more of a Band-Aid to the problem now, right? Now you're trying to figure out, okay, what do I do to protect the tenant, myself, now that we're in this situation? So again, talk with your property management company about different strategies and tactics around that. I am a big fan of, it was in the past that, longer term leases seemed like a great idea. And I definitely have had 5-year leases on a couple of my properties. But now, again, talk with your property management company about their suggestions because the markets shift. And, rent is obviously continuing to go up, certainly in appreciating market areas where you're in great school districts and there's a demand for that. So by virtue of being in great school districts, being in great investing areas, the lease length kind of goes out the window. You see what I'm saying? In many ways, I feel like the longer the lease, then what you're dealing with is almost like you're trying to lock someone into a bad deal. Does that make sense? Like if you know you have a good place to rent in a great market, you should be able to fill that property in 2 weeks, right? So like we have a waiting list for tenants in our properties because the school districts are the best and the job market is fantastic. So if someone wants to leave and they have to move, I don't want to say, hey, well, you signed a 5-year lease, you're only in year 2. Fine. Okay. You have to break your lease and move out. Here's your penalty, etc. And we have another tenant ready to move in, like within a week or two after a cleaning and a tenant turnover. So in many ways, I feel like that longer lease agreement is sort of locking people into something. It hurts you, I think, also in the long run because after a tenant moves out, that's obviously an opportunity time to look at the market and raise rents. And say, okay, we can raise it $100 because every other house in this entire neighborhood went up $300. So you have the opportunity to make more profit, especially if you're offering a great property in a great school district in great areas. So some things to consider. I get the appeal of the longer lease. I really do. And in the beginning of my investing journey, I thought, well, 5-year lease, that's great. But then what happens is after a year to 2 years, your rent is way lower than the rest of the neighborhood. And so now it's like what a bargain this person has, and now for another 3 years, while the market is going up, you're locked into this 2-year-old lease agreement. So just think about those things. But again, I think this is more of a Band-Aid question than a preemptive planning, which is make sure you're investing in markets that are in many ways recession-proof, pandemic-proof, where you have low crime, expanding job market, boring markets. We're not talking Vegas, in San Francisco. We're talking about bread and butter, great neighborhoods where there is just expansion and growth and a lot of potential. And then that way you really don't have to worry about this lease length question. Anyway, Crystal, thank you for that thoughtful question. I hope I gave you a thoughtful response. If you have a voicemail question you'd like to ask, again, go to our website, go to morrisinvest.com/Clayton. And again, while you're there, grab our 90-day financial freedom bootcamp. Again, we put a lot of work into this and it's totally free. Download the PDF. It's like 30 pages or so. And we take you through week to week to week. And we're going to make you do homework. We're going to make you put stuff on a calendar and really map out your financial future. And I think it'll be transformative. We've had thousands of people download our boot camp, and they've had unbelievable success. So take advantage of it. It's totally free. We built it for you. We want to see you succeed. Thanks, everyone. Now go out there, take action, become a real estate investor. I believe it's the #1 way to build wealth. We'll see you next time, everyone.